Hello to everybody, our dear subscribers. FutureTrend channel is ready to present our point of view how to trade major currencies for the date of 19 December 2018. And you know that today is really very important day for all of us. For those who trading currencies, for those who trading metals or other financial instruments, or I don't know, bonds or equities or something else. The date of today is the date of the Federal Open Market Committee rate decision. Somebody can tell that, okay, what's important? That okay, how much such kind of meetings we already had before, but today probably is a crucial day who can lay the ground for future short to medium term trends in the different types of assets in the world financial markets. And now we will try to explain you why. Today the market expecting the fourth consecutive rate increase from the part of the Fed. Okay, there is a diminishing probability of such kind of increase, because you know that it was such kind of probability for the last couple of days plunged from the level of 75% to the level of 67%. And you already can see this kind of impact on the price of the United States currency, which is lower, even much lower against some types of major counterparts for the last couple of sessions. But today the question is still open. First of all, should the Fed really increase its benchmark interest rate? Should the Fed take a pause in its process of tightening? And how aggressive will be the Fed in 2019 in its policy of tightening, taking into account how much pressure now we are seeing the pressure on the members of the Federal Open Market Committee, not only from the part of the United States President, but also from the part of the world community. And yesterday's example, a very good example, is yesterday's article in the Wall Street editorial regarding that if the Fed would take a pause at today's meeting, it would be a really very prudent decision. All in all, now let's, in kind of brief words, in kind of short words, to understand what the currency market, what kind of way the currency market will take in one kind of rate decision or the other. First of all, in case of no hike today, we should understand that it will be really very powerful kind of weapon against the dollar bulls, because in that case we should wait for a really dovish tone from Jerome Powell at his press conference afterwards. And of course the United States dollar should plunge against most of its counterparts. Let's see, for example, the euro dollar could really make a kind of good progress to the level 115 and beyond. The dollar yen could easily take another nosedive, and in that case we even could plunge to the level of even 111 and could even test during next couple of sessions. Once again, in case of no hike and in case of dovish comments from the side of Jerome Powell, could easily retest the moving average 200-day line located at 110.85. Once again, in such kind of decision we should expect a really good impact on the dollar price, and that could lay the ground once again for the shorter to medium term trends in different currency pairs, especially in the major currencies. In case of sterling, it's hard to say, because sterling is also under the pressure of the Brexit negotiations. Also, don't forget that despite of today's Federal Open Market Committee rate decision, economic projections statement, we have UK consumer price index numbers. By the way, also applies for some part of commodity currencies, because today is the day of publication of Canadian Consumer Price Index, and tomorrow we have two important economic releases from Australia and New Zealand in the form of Australian Employment Report and New Zealand Gross Domestic Product numbers. So, what to expect in case the Fed rises its benchmark interest rate as was expected by the market, and remains quite hawkish, ready to increase its benchmark interest rate 3 times during next year, like they already did before. I mean, regarding the projections, dot plot projection. In that case, of course, the United States currency could withstand all the negativity it has at the moment, and in that case, we could easily expect that the dollar recover. But of course, it will not bode well for the equity market, especially in the United States, because we should understand how much damage such kind of decision could make for the United States stock market. So at the moment we suggest that it's a little bit unbelievable kind of decision. More reliable one, more normal one, let's say so, could be an increase today in the Fed's funds rate, and a little bit cooler tone of Jerome Powell at his press conference. Probably the dot plot projection will be reduced from 3 to 1 or 2 increases, and probably the United States Central Bank will be more data dependent in 2019. That means that the market should be more cautious regarding next publication of United States economic numbers, and all in all it will have more or less, we suggest, more or less negative tone for the United States dollar. Anyway, let's say overall on a balance kind of ground. This is our vision of how to trade major currencies in one way or the other. That's depending on the situation. We will come with new report after the results of today's Federal Open Market Committee decision, probably in time of Jerome Powell press conference, probably some later, that's depending. Anyway, we should understand that in case of a no hike, we should expect a dovish comment from Jerome Powell, and it will be a clear signal for selling the dollar. FutureTrend channel was with you. Take care, bye bye for now, and see you in the evening.